Good morning, everyone, and welcome to today's webinar. For those of you who have just logged on, we have already completed a sound test, and a big thanks to everyone who helped out with that. First of all, I want to introduce ourselves. My name is Holly McHugh, and I'm a marketing executive here at Brightpay. And also joining me to present today's webinar are Rachel Hines, who is the Marketing Manager, and Karen Bennett, who is the Chief Commercial Officer here at Brightpay. First of all, I want to look at the agenda for today's webinar, and we've divided today's webinar into two different parts. In the first half of today's webinar, we are going to look at the furlough scheme and the upcoming changes that will take effect from the 1st of July. And then for part two of today's webinar, we'll look at redundancies, vaccinations, and the workplace. Finally, at the end of the webinar, we will have a questions and answers section where we will answer any questions that you may have. For our questions and answers session, we'll be joined by Paul Byrne, who is the Managing Director here at Brightpay, Victoria Clark, who is the Product Development and Training Manager, and Laura Murphy, who is our Chief HR Officer. So if you do have any questions, you can type them into the questions box on your control panel at the side of the screen, and we will try to get through as many questions as possible. This webinar is being recorded, and all attendees will receive an email later today with a link to the recording, so it's no problem if you do need to leave at any stage. Also, in the email later today, there will be a copy of the presentation slides that we are using today, or you can also download the slides right now if you wish on the Handouts tab on your control panel. We will also include some useful documents and additional resources that you may find helpful in the email later on today. Now that all of the housekeeping is out of the way, I'm going to pass you over to Karen to get started with today's webinar.
Thanks, Holly, and good morning, everyone. So as more and more lockdown restrictions are lifted, many businesses are happy to be experiencing some form of normality. However, the furlough scheme continues to be a requirement for many businesses. Although the coronavirus job retention scheme has been extended until the 30th of September this year, the levels of subsidy support from the government will start to reduce from next month. Under the existing scheme rules, for periods ending on or before the 30th of June, employers can claim grants covering 80% of wages up to a cap of £2,500 for the hours an employee is not working. Where the employee is not working, the employer does not have to contribute towards wages for unworked hours, but they are responsible for paying employer NIC and pension contributions. Where an employee is on flexible furlough, or also known as partial furlough, employers have to pay full pay for any hours worked. However, the furlough rate will change from the 1st of July 2021 as the scheme begins to wind down. For the month of July, the government will contribute 70% of wages up to a maximum of £2,187.50 per month for the unworked hours. The employer will also have to contribute 10% of wages so that the employee receives 80% of their usual wages for any hours not worked, up to a cap of £2,500. For August and September, the government subsidy will drop to 60% up to a cap of £1,875 per month, with the employer having to top up the additional 20% so that the employee receives 80% of their wages. And again, this is capped at £2,500 per month. Employers must continue to pay employer NIC and pension contributions on the government subsidy for the hours not worked. Employers can also continue to choose to top up their employees' wages above the 80% total and the £2,500 cap for the hours not worked at their own expense. So now you know how much you can claim. How do you determine which employees you can claim for? For periods starting on or after the 1st of May 2021, you can claim for employees who were employed on the 2nd of March 2021, as long as they were notified to HMRC on an RTI submission between the 20th of March 2020 and the 2nd of March 2021. You do not need to have previously claimed for an employee before the 2nd of March 2021 to claim for periods starting on or after the 1st of May 2021. And so this means employees who started working for you on or before the 2nd of March will now be eligible for the scheme for claims starting on or after the 1st of May 2021. To be eligible for the grant, employers must have confirmed to their employee in writing that they have been furloughed, and you must also keep a written record of the agreement for 6 years. Employers will decide the hours and shift patterns their employees will work, and so employees can work as much or as little as the business needs. And again, you need to keep records of how many hours your employees work and the number of hours they are furloughed for. For employees who are moving from full-time furlough to flexible furlough, or vice versa, you will also need to agree on this with the employee and keep a written record that confirms the new furlough arrangement. If an employee is already on a flexible furlough agreement, this can be varied to reflect any variation in the working pattern agreed between the parties. The employer does not need a new furlough agreement each time the worker's hours change, and can instead issue an amendment if there is a change in the working pattern. Employers can enter into a furlough agreement with the employee more than once. There is currently no minimum furlough period. However, there is a minimum claim period of 1 week, which we will look at in more detail shortly. I'll pass you over to Rachel.
Thanks, Karen. So next is calculating a CJRS claim and determining what you can claim for. If you're in a position where employees are fully furloughed, you don't need to work out the employee's usual hours and furloughed hours. However, if an employee is flexibly furloughed, you will be required to work out the employee's usual hours, their actual hours worked, and their furloughed hours for each claim period. Brightpay provides functionality to calculate and apply furlough pay to an employee's payslip, and this includes support for flexible furlough. By entering the employee's usual hours worked and the actual hours worked into Brightpay, the software will automatically calculate prorated subsidy. There are different calculations to consider when calculating your employee's usual hours, and this depends on whether they work fixed or variable hours. And you do also need to factor in the relevant reference period, and this depends on when the employee first became eligible for the scheme. So first we'll look at employees who work a fixed number of hours. And for these employees who were eligible for furlough under the original scheme, the usual hours calculation is based on their normal contractual hours at the end of the last pay period, ending on or before the 19th of March 2020. And this is regardless of whether or not they were actually placed on furlough during the initial few months of the scheme. A different pay reference period exists for all other workers, that is, those who were not eligible for furlough under the original scheme. So, for example, new joiners after the previous cut-off date of the 19th of March 2020. For these employees, the calculation is based on the wages payable in the last pay period ending on or before the 30th of October 2020, and the employee must have been included in an RTI submission to HMRC between the 20th of March 2020 and the 30th of October 2020. Where neither the 19th of March 2020 nor the 30th of October 2020 reference dates apply, the employee is not eligible for periods starting before the 1st of May 2021. However, if you made a payment of earnings to the employee, which was reported to HMRC on an RTI submission between the 31st of October 2020 and the 2nd of March 2021, they may be eligible for periods starting on or after the 1st of May 2021, and their reference date will be the 2nd of March 2021. It's also worth noting that if an employee with fixed hours was on annual leave, off work sick, or on family-related statutory leave at any time during the last reference period, the usual hours should be calculated as if the employee had not taken that leave. For employees whose pay varies depending on the number of hours worked, again, the usual hours calculation depends on whether or not they were eligible under the original scheme. For those who were eligible for furlough under the original scheme, again, regardless of whether or not they were actually placed on furlough, their usual hours will be the higher of the average number of hours worked in the 1920 tax year, or the hours worked in the corresponding calendar period in the year before the furlough claim period or the look-back period. As we have passed the 1-year anniversary of the furlough scheme, for claim periods from March 2021 onwards, the corresponding calendar period in 2019 should be used as opposed to 2020 when calculating the usual wages for employees on variable pay, and this is also known as the look-back period. This is to prevent the issue where an employee may have been furloughed in the same month last year, and so would only have received 80% of their pay. So for example, for June 2021, you should use the hours worked in June 2019, so that those employees who are furloughed in June 2020 won't be at a disadvantage. If your employee did not work for you in the look-back period for the month you're claiming for, you can only use the averaging method to calculate the 80% of their wages. For all other employees, that is, those who were not eligible under the original scheme, you'll need to calculate the usual hours based on the average number of hours worked in the 2021 tax year up to the day before the employee's first day spent on furlough, and that is on or after either the 1st of November 2020 for those with a reference date of the 30th of October 2020, or the 1st of May 2021 for those with a reference date of the 2nd of March 2021. And I'll pass you back to Karen again.
Okay, so next we're moving on to making a Cjrs claim. And employers need to make a claim through HMRC's online claim portal to avail of the scheme. Brightpay does include a Cjrs claim report, which can be used to ascertain the amounts needed for input into HMRC's online service. The minimum claim period is 1 week, and claim periods must start and end within the same calendar month. Therefore, pay periods that span 2 calendar months must be broken down into 2 separate claims. It will only be possible to claim for a period of less than a week if the period claimed for includes the first or the last day of the month, and a claim has already been made for the period ending immediately before it. Employers can make claims before, during, or after the payroll is run. Claims can be made up to 14 days before the end of the claim period. Employers can only make one claim per claim period, so you must include all furloughed and flexibly furloughed employees in the one claim, even if you pay them at different times. When claiming for employees on flexible furlough, employers will need to report hours worked along with the worker's usual hours in a claim period. Therefore, it is best to make a claim once you're sure of the exact number of hours your employees will work, so you don't have to amend your claim at a later date. Next, with regards to claim deadlines, claims must be submitted within 14 calendar days after the month they relate to, unless this falls on a weekend, in which case the deadline is the next weekday. The deadline for claims relating to May 2021 has just passed on Monday of this week, and so the next deadline is the 14th of July 2021 for claims relating to June 2021. HMRC may also accept late claims if you have a reasonable excuse, provided you have taken reasonable care to try and claim on time and claimed without delay as soon as you are able to. HMRC has set out a list of various reasons that they consider to be reasonable excuses, and you can see them here on the screen. You must contact HMRC to ask to submit a late claim. You should do this as soon as you are ready to make your claim. HMRC should only be contacted once the claim deadline has passed. If you have claimed too much CJRS grant and have not already repaid it, you can repay it as part of the next online claim without needing to contact HMRC. If you claimed too much but do not plan to submit further claims, you can let HMRC know and make a repayment online. You must notify HMRC and repay the money by the latter of either 90 days from receiving the CJRS money you're not entitled to, or 90 days from the point circumstances changed so that you are no longer entitled to keep the CJRS grant. If you do not do this, you may have to pay interest and a penalty, as well as repaying the excess CJRS grant. If you did make a mistake in your claim, that means you received too little money, you'll need to amend it within 28 calendar days after the month the claim relates to, again, unless this falls on a weekend or on a bank holiday, in which case the deadline is the next weekday. The deadline to amend claims for May is Monday, the 28th of June. If you haven't rectified a mistake in your claim for May by the 28th of June, but believe that you have a reasonable excuse for missing the deadline, you must contact HMRC to ask to submit a late claim. Back to you, Rachel.
So next is employer compliance. And as part of HMRC's commitment to transparency and to deter fraudulent claims, details of CJRS claims are now being published monthly. The list of employers who have made a claim under the CJRS has been updated to reflect information for claim periods from December 2020 to March 2021. And this list includes employer names, an indication of the value of the claim within a banded range, and the company number for companies and limited liability partnerships. The employer names used for the publication is the name associated with the qualifying PAYE scheme, and so it may not be the same as the company's trading name. The publication does not include employers who have made an application to have their details withheld, or those who have paid back the whole grant prior to the publication of the list. Details of claim periods from December 2020 to March 2021 are also available to employees in their personal tax accounts. Employees are being encouraged to report fraud to HMRC where they have evidence that suggests that their employer is abusing the scheme. HMRC's assumption is that between 5% and 10% of claims related to the furlough scheme are fraudulent. And it's estimated that since the start of the furlough scheme in March 2020, over £3.5 billion paid to employers could be fraudulent or have been paid in error. Given the significant investment by the government and the sheer scale of the suspected fraud, it is expected that HMRC will be relentless in pursuing those who have taken unfair advantage of the scheme, and HMRC is now aiming to collect double the amount wrongly claimed. However, HMRC do appreciate that mistakes happen, and they're not aiming to target innocent errors. Finally is what will happen when the scheme ends. The government had originally said that the new job support scheme would go live when the Cjrs ends. However, given the extension of the furlough scheme until the 30th of September 2021, the job support scheme is unlikely to come into force. The government had also announced a job retention bonus. However, the bonus has also been shelved given the extension of the job retention scheme. It's unlikely that any further government subsidy or job retention incentive will be in place when the Cjrs closes. So that's it for part 1 of today's webinar. Now for part 2, I'm going to pass you over to Holly. And here we're going to look at the HR angle, covering redundancies, vaccinations, and the return to the workplace.
Thanks, Rachel. The number of redundancies in the UK has accelerated at the fastest pace since the financial crisis. In the 3 months to January 2021, 308,000 redundancies were made, following 204,000 redundancies made in the 3 months to February 2021. According to ACAS, redundancy-related calls to their helpline have increased by over 160% over the past 2 months when compared to the same period in 2019. If you are in the regrettable position that you may need to make redundancies, here are some of the key points you need to know. When making an employee redundant, there are 2 key initial considerations. You have an obligation to behave reasonably in order to avoid unfairly dismissing an employee. And if you are making 20 or more employees redundant within any 90-day period at a single establishment, you must consult employees. These 2 obligations still very much apply, and the impact of the pandemic has not negated these 2 obligations. So for the purposes of today's webinar, we want to focus on smaller scale redundancies, i.e. less than 20, where collective consultation does not apply. We have drafted the following steps in line with ACAS guidance. You should aim to avoid compulsory redundancies through voluntary redundancies, agreed short-time working, or other flexible staffing arrangements. You should also carry out a consultation. This involves speaking to every employee individually about why there are redundancies being made and ideas and feedback on alternatives to redundancy. And it's important to ask employees for their thoughts as well. The consultation must be meaningful. Your plans must not be finalised at this stage, and you should aim to include any employees' suggestions or ideas that you agree with. These meetings do not need to be face-to-face, and they can be held virtually or by phone. Next is selecting staff for redundancy, and employers should use fair and objective criteria when selecting employees for redundancy. Ideally, all employees at risk of redundancy should be put in a selection pool and assessed upon criteria such as standard of work, experience and qualifications, and disciplinary record. Selecting those who have been on furlough over other employees may not necessarily be fair. These employees may have been parents with childcare issues or individuals with disabilities, so there could be a risk of a direct or indirect discrimination claim. Once you have selected staff for redundancy, you need to give employees notice of their redundancy, but we will come back to this in more detail shortly. You'll also need to work out redundancy pay, and again, we'll go into redundancy pay in more detail. And the final step is to support your staff. Redundancy is an extremely stressful time, so be there and available to take questions and support them. And it's also worth noting that employees that are being made redundant are entitled to paid time off to look for another job or to complete training. Moving on now to notice periods and notice pay. Employees must be given a notice period before their employment ends, and either statutory notice or contractual notice will apply. The statutory redundancy notice periods are as follows. At least 1 week's notice if employed between 1 month and 2 years. 1 week's notice for each year if employed between 2 and 12 years. And 12 weeks notice if employed for 12 years or more. It is always advisable to check your contracts of employment, as the contractual notice agreed may differ to statutory notice. Where contractual notice is greater than statutory notice, contractual notice will apply. However, where the contractual notice is less than statutory notice, then statutory notice will apply. Statutory notice pay is protected, meaning that employees are entitled to be paid in full for their notice period. If the notice in the contract is the same or less than the applicable statutory notice, 100% of the employee's normal pay should be paid during the notice period. Amendments to the Employment Rights Act, which came into force on the 31st of July 2020, confirmed that employees that are serving their notice period while on furlough leave will need to have their salary topped up to 100% pay. However, things are slightly different where contractual notice is greater than the statutory notice period. If contractual notice is greater by at least 1 week, an employee should receive their normal full pay as long as they are working. If they are not working, however, they should receive what they would have been normally paid for that absence. So if you have an employee who is out of work due to furlough and being paid at 80%, and this employee's contractual notice is greater than statutory notice, they may be paid at 80% for their notice period. So for this reason, it is extremely important to always check the contract of employment. And now I'm going to pass you back over to Rachel.
Thanks, Holly. So there are two methods of paying notice pay to employees. You may decide to retain the employee on the payroll and continue to pay them through their notice period. And from the 1st of December 2020, the employer cannot claim CJRS payments from HMRC during the notice period. You can also opt to pay employees in lieu of notice. And it's also worth noting that where a payment in lieu of notice is made, it is subject to tax and national insurance. Normally, an individual is entitled to statutory redundancy pay if they are an employee and have been working for the employer for 2 years or more. The employee will be entitled to half a week's pay for each full year they have worked under 22 years old, 1 week's pay for each full year they have worked when 22 years or older but under 41 years old, and 1.5 weeks' pay for each full year that they have worked when 41 years old or older. Where an employee's weekly pay varies, their average weekly pay should be calculated using the 12 weeks before the day they got their redundancy notice. Redundancy pay is capped with the length of service being 20 years. And for employees made redundant on or after the 6th of April 2021, a week's pay is capped at £544, with the maximum statutory redundancy they can receive being £16,320. Redundancy pay, including any severance pay under £30,000, is not taxable. As per employment law changes brought in under the Employment Rights Act on the 31st of July 2020, where an employee is furloughed or flexibly furloughed, if they are dismissed for reasons of redundancy, they are entitled to have their statutory redundancy pay calculated on the basis of their normal pay rather than on the basis of their reduced furlough pay. Average weekly pay is usually calculated by getting the average pay over the 12 weeks up to when the employer notifies the employee that they are being made redundant. Under the new legislation, employers must treat any weeks an employee spent on furlough over the 12-week reference period as if they were working and on full 100% pay. In terms of processing a redundancy payment through Brightpay, we would advise you that you create a new addition called redundancy or redundancy payment. When creating the addition, make sure that you leave unticked tax can be deducted and national insurance contributions can be deducted. There is a preset addition called Termination Award available in Brightpay. You could use this option, but if you made any change to the title here, it will impact on any reports that you might want to run. And therefore, the cleanest and most efficient way will be to create a new addition. And I'll pass you back over to Holly.
Thanks, Rachel. Next, we'll move on to the vaccine policy. And this is such a topical area and one again that is changing by the day, as 41.8 million people in the UK have received their first dose of the vaccine. We thought we'd approach this section as a Q&A, which covers all questions you may have about the policy. So first up, can you ask an employee if they have been vaccinated? So while employees are not obliged to provide personal medical information, employers may request vaccination information. An employer's justification for doing so is likely to be in order for them to meet their legal obligations under the Health and Safety at Work Acts. It will be up to the employee if they wish to volunteer or provide this information to their employer. Employers should be mindful, if asking for this information, that there will be data protection considerations. holding information on whether or not an employee has had the vaccine is likely to be considered a special category under data protection law. This means that the data is considered sensitive and additional safeguards must be put in place to protect it. The next question is, can you insist that an employee be vaccinated? Whether employers can mandate their workers have the jab is still hotly debated. Currently, vaccinations are recommended by UK authorities. However, the government has said that it is not planning on making the vaccine mandatory. It is likely to be very difficult for an employer to argue and defend a case that vaccination is compulsory in a workplace. So therefore, there is very little an employer can do if their employee refuses to get the vaccine. Employers need to think carefully about any action they take and consider the potential legal consequences associated with these actions. For example, dismissing an employee with over 2 years service because they refuse to be vaccinated would likely to be held as an unfair dismissal in a tribunal. So what can employers do? Employers should be doing all they can to encourage employees to be vaccinated. ACAS have recommended that employers have open discussions with staff about the vaccine, as this could help reduce concerns employees may have. In thinking about how you might structure any such discussions, employers should seriously consider putting a vaccination policy in place. A vaccination policy can include a number of pieces of information. You could provide your workforce with a list of resources where they can obtain further information about the vaccination programme, for example, from gov.uk and nhs.uk. You very much want to promote that employees make an informed decision. You will absolutely want to recognise individual choice. You want to be careful not to stigmatise or discriminate against those who do not get vaccinated or choose not to. You may want to reiterate that all COVID secure guidelines will remain in place as you move through return to work. Interesting, a Glassdoor poll found that 68% of employees wanted social distancing measures and mask wearing to continue after everyone in an office had been vaccinated. Your policy should clearly set out whether employees will be paid or unpaid for the leave to attend their vaccination appointment, and also if, as a result of being vaccinated, they suffer side effects and need to take sick leave, will they be paid? Clarifying your stance here can be very powerful in terms of encouraging staff to be vaccinated. So just to go back to the Glassdoor poll, 12% of respondents said they did not intend to be vaccinated. However, 1/4 of that 12% said they would be more likely to take up vaccination if their employer offered an incentive. Finally, it might be worth noting that including something in your policy that reminds employees to respect each other's privacy and not to have open discussions about the vaccine with colleagues. Bright Contracts has recently been updated to include a vaccine policy which covers these consideration points for our customers to include in their employee handbooks. And this can be found under the Terms and Conditions tab. Back to you, Rachel.
Thanks, Holly. So we're now moving on to the final part of today's webinar, which is managing the annual leave backlog. And just to point out that if you do have any questions so far on furlough or the vaccinations and redundancies, feel free to type them into the questions box on your control panel at the side of the screen. Key workers who are unable to take all of their statutory annual leave entitlement due to COVID-19 are allowed to carry over up to 4 weeks of unused holidays into the next 2 years. And while this flexibility is necessary to protect workers' rights, it has also caused an additional annual leave backlog that could become a real nightmare for employers to manage. Moreover, with some lockdown restrictions still in place across the UK, many employers have been saving their annual leave for when restrictions are lifted. And this means that managers will likely be in a situation where many employees will request to take leave at the same time. Where possible, managers should allow the leave. However, they also need to ensure business continuity. Therefore, it is important to balance the employee's request about the timing of leave against the needs of the business. To avoid a build-up of leave that employees will want to take when they are back at work, employers can require employees to take annual leave on dates chosen by the employer, as long as they give twice as many days' notice as the period of leave the employee is required to take. Offering to buy back employees' holiday days that are in excess of the statutory minimum is another method that can be used. However, this could end up being expensive and hard to manage for employers. So what's the best option for all parties involved? While it might not be possible to please everyone and give them their requested time off, it is important that you deal with annual leave requests in a way that is transparent and fair. By introducing Brightpay Connect, employees can access a self-service smartphone and tablet app, and this is where they will be able to request leave anywhere, anytime, directly from their smartphone or tablet, meaning they don't need to be in the workplace to request leave. Employees would also be able to view a Payslip library, access HR documents, and view their annual leave calendar without needing to contact HR. When an employee requests leave, you will get a notification to log into your online portal to approve or reject the leave. The most popular policy of granting annual leave is on a first-come, first-served basis, and with Brightpay Connect, you can ensure that this fair method of approving leave is implemented, as you will be able to see the order in which requests come in. You can also access a company-wide calendar displaying who is on leave and when, so that you can ensure adequate staffing levels before approving the leave request. So here you can see there's 4 employees on leave on this particular day. Going back to the dashboard again, I just want to point out that HR managers should not be the only people involved in the leave management process. You should also involve department heads, line managers, or even team leads to relieve you of the admin burden. By delegating the responsibility among department managers, you can free up time to spend on other important HR tasks, such as introducing the vaccine policy. Department managers are likely to have a much better understanding of their project timelines and deadlines than the HR department, and by allowing these managers to have control over leave requests, they can better manage their team's schedule and workload. With Brightpay Connect, you can set up an unlimited number of users, each with their own user permissions. For example, a department manager can be set up so that they can only view employees within their department, and you can also limit their access so that they can only view the leave calendar and approve employee requests without having access to the payroll information or HR documents. And once the leave request has been approved by the relevant manager, it will automatically synchronize to the payroll software on your desktop. And one last tab that I want to point out here as well is the documents. And here you can upload any type of document or resource that you want to distribute to your employees. So for example, that vaccine policy, or even here I've uploaded the likes of a contract of employment or a company handbook. Documents and resources can be shared with individual employees, employees in a particular department, or all employees. And you can also send notifications to employees and monitor the date and timestamp of when the employee accessed the resource or document. So it's a great way to communicate with your employees, but also to protect you as an employer. So I'm going to finish up there with the sales plug, but to be honest, that's only the tip of the iceberg when it comes to Brightpay Connect. But if you do want to find out more, we do run online demos of both Brightpay and Brightpay Connect on a daily basis. So please let us know if this is of interest to you. So it's now time for the questions and answers. And if you have any questions, feel free to type them into the questions box. And today we have Paul and Victoria and Laura who are joining us for the webinar. So Vicky, I might pass it over to you to look after today's questions.
Thanks, Rachel. Good morning, everybody. Yes, we just have a few questions in, so I'll get started. So the first question in is, an employee on furlough has served us 3 months contractual notice. Am I correct in stating that firstly, we must pay the employee a full rate for the 3 months, but B, that we must also, but that we are also permitted to claim furlough as we, the employer, did not serve the notice or terminate the contract? One for you, Laura.
Yes, good morning, Vicky. Hello, everybody. So I might actually take B, the second part of that question first. So yeah, the guidance or the legislation on claiming furlough during the notice period changed back on the 1st of December 2020. So now employers can no longer claim for furlough during a period of notice when an employee is working their notice. Cjrs claims cannot be made. And that, unfortunately, in this situation, unfortunately for you, that does include people who are serving their notice of retirement or resignation. So it will apply in this situation. And then just to go back on the first section of that, must we pay the employee at the full rate for the 3 months? So that's going to depend, kind of going back onto what Holly and Rachel were saying earlier, that's going to depend on what contractual notice is as opposed and statutory notice. So if the situation is that your contractual notice is more than a week greater than statutory notice, then it will, and the employee is not working, then it will be sufficient if you've been paying them at 80% pay up until now to continue as is, if that's the agreement at the time. But that'll depend on what the agreement has been over the last few months. If you have been paying them at 100%, then you'd need to continue. If statutory notice is the same, if they've that longer service where they're now entitled to 12 weeks statutory notice and they're not working, you would pay them at 100%. So it'll just depend on the situation there. But unfortunately, see, the furlough will not be able to be claimed.
Thanks, Laura. The next question, if an employee is flexibly furloughed and the employer is topping their wages up to full pay, if the hours they have worked and their furlough pay takes them above their normal monthly pay, should the employer pay the extra amount as opposed to their normal full pay?
I'll take that one, Vicky. Yeah, I'll try that one. I might ask Laura for your help in this one because I might be adopting a very simplistic view of the question. Basically, as far as I'm aware, that the topping up is purely voluntary on the employer's part. So, you know, if the actual furlough pay plus the pay for hours worked actually equals or exceeds what their normal pay would have been, I wouldn't see any reason why they would need to have an additional top up on top of that. Unless there's some contractual thing. Laura, can you think of anything that might have helped?
Yeah, no, I was interested to see what you and Vicky might start off that answer, because I'd almost be concerned about topping up beyond normal pay, because that's a change. Although it's maybe a positive change for the employee, it's still a change to your basic terms and conditions, and you might find yourself in a position then further down the line where there's no furlough, that employers are saying, well, actually I was entitled to this amount that's more. So I would avoid topping up beyond normal pay.
Yeah. Okay, thank you.
Thanks, Paul and Laura. May I use average working hours as usual hours in 1 month as the usual hours for a claim, and then hours worked from corresponding period as the usual period for another claim for the same employee?
I guess this is referring to people on the March reference period date. But basically what the rules state is that you actually do the calculation using the higher amount of usual hours that comes out of the two calculations. So in 1 month, that higher amount may result from using a corresponding pay period, whereas another month it may be from using the average. But in all cases, you do the two calculations and you use the higher amount.
Thanks, Paul. If I was told that I will be made redundant due to 4 years service, what will be the employer normal procedure? And when paying the redundancy pay, will any holiday owed or accrued be taken into consideration? And for yourself, Laura?
Yeah, I come in there, Vicky. I suppose the normal procedures that would apply will depend on how many other people are being made redundant. So again, going back to Holly, I think at the start, if it's over 20 people, you're looking at collective redundancy. So there's a negotiation, collective redundancy consultation that's required. That said, even if it is less than 20, some sort of consultation is definitely recommended. And then in terms of the pay, that'll all be again calculated based on your length of service and age, where there's different categories depending on years serviced, years worked during different age categories. So that'll be the redundancy calculation. And then absolutely on termination, if there are any holidays that are owed or accrued, they should be paid for as well, separate to the redundancy pay.
Thanks, Laura. A couple of questions in then just on payment in lieu of notice. So it's stated as being subject to tax and NI, but for the national insurance, is that employers or employee national insurance or both?
I would say both. Yeah, it's a normal payment.
And is it subject to employer pension and employee pension?
Yeah, that one's probably a little bit grayer, and it would normally depend on the contract of employment. Generally, unless stated in your contract, an employee would be due the value of the pension and any other benefits. But ACAS do have some nice clear guidance on that, which might be worth just looking at as well, and also checking the contract.
Thanks, Laura. They're probably all for you, these ones coming up. If an employee is made redundant and their contractual notice is greater than statutory, do you only have to pay full pay for the statutory notice period and then 8% for the remainder?
Okay, sorry, just read that one. I'll just look at it again here. So if the contractual notice is greater by a week or more, you would, and the employee is not working, so they've been on furlough, you could just pay them at 80% if that's the agreement up until now, that you've only been paying them at 80%. You would pay them at 80% for 100% of the notice. You wouldn't have to divide the element that was statutory and the element that was contractual. The whole period as a whole could be at 80%.
Okay. If someone was on furlough and returned back to work, is it correct that an employer cannot make them redundant?
No, I wouldn't say that. I think they'd almost be separate. And if you're making a redundancy, that'd be a separate process, and you'd be looking at your valid reasons for redundancy. And then if you're going towards selecting an employee, you're looking at your selection criteria. And again, making sure they're objective and looking at all the different performance measures. There is, I suppose, in commentary, there's one comment to just be careful if the reasoning why an employee was placed on furlough might have been due to health reasons or childcare issues. You may have a discrimination claim, but that's just a consideration. But as a blanket, to say you cannot make them redundant, no, that would be you could, just going through your redundancy processes.
Are employers allowed to pay any unused holidays from previous years over a few months in this year?
No, so it's not permissible to pay in lieu of holidays. The only time that we would do that would be on termination.
Okay. When working out furlough for those paid weekly, should the total weekly pay be divided by 5 and multiplied by the number of days in June for the 80% claim, excuse me, and for July for the 70% claim? Or should it be based on when the take-home pay is paid, i.e. as paid on the Friday, it should be 70% for the whole week? I can take that one there. So it's done over 7 days. If you're paying weekly, so if you have a weekly pay period and it's I suppose it's crossing over from June into July, that pay period, we use a daily basis approach in Brightpay. So we'll look at how many days are falling in June and how many days are falling in July and apply the 8% and the 70% accordingly. Very much the same as use them for the claim report, and I do have an online document done up which explains how the furlough pay calculator works for these pay periods that straddle the 80% and the 70% claim periods. So it covers the furlough pay calculator and the claim report. So I might ask Rachel to send that on as well after the webinar to you all. Are furloughed employees allowed to carry leave forward as well as key workers?
Yeah, I'll come in there, Vicky. It's an interesting question, and I suppose the legislation changed back at the start of COVID to allow employees to carry over annual leave, untaken annual leave for a period of 2 years by reasoning that they were unable to take their annual leave due to COVID. I think the kind of thought process behind this and the main kind of drive for this enablement to carry over the leave was to allow key workers to continue providing essential services, particularly when we were in the height of the pandemic, and thinking about healthcare workers or those in the food supply chains, where it was just an all hands on deck situation. And actually the guidance around annual leave does mention that it is unlikely that those who are on furlough would need to carry over leave, and the guidance again is very much about promoting that your employees take some leave. Now there is a counter argument to that would say, well, if you can't go anywhere and you're in lockdown, how are you supposed to take annual leave? So I think really it's a measured response. As an employer, maybe you could try and promote employees to take some of their annual leave, but I think it would be okay for some leave to be carried over, but yeah, a measured response, I would say.
Okay, thanks, Laura. If a member of staff started employment on the 1st of January 2021 and we included their details on a March 2021 RTI, can we put this staff member on furlough pay, and which period for the furlough pay? I can take that one. So as long as the RTI submission was submitted on or before the 2nd of March, then they will be eligible for furlough claims from the 1st of May onwards. There, okay. Is the extra 10% employer contribution from July required for director payrolls where the spouse is an employee, and also director only payrolls?
Yes, I can take that one. I think there really has been no distinction between directors and normal staff in any of the guidance. So I would have to assume that this does apply to directors and director spouses as well. I guess it's going to be interesting to see if there's any change to the dates given the extension of the period of the opening up, because the 10% will be quite an onerous obligation, I suppose, for a lot of employers who obviously have been hit badly by the pandemic, and obviously 20% then in August and September is even more so. But just in relation to that particular question, no, it does apply to the directors as well, as far as I'm aware.
Thanks, Paul. Yeah, so I'm just conscious of time there that we're coming up to 11:30. So I think I'll pass you back to Rachel there.
Great. Thanks, Vicky, and thanks, Laura and Paul as well for joining us for the questions. So yeah, as I said at the start of the webinar, we will send out an email to everyone later today, and this will include a link to the recording of the webinar and a copy of the slides, and I will include that resource that Vicky mentioned as well. So I'd like to thank you all for joining us for today's webinar, and we hope you found it useful. Thank you. Bye.
Thank you. Bye-bye.